Prepare to dig deep into the world of Tesla stock forecasts with insightful commentary from analysts and industry professionals. Regarding Tesla's potential for future growth, the outlook appears optimistic. Longtime automotive specialist Sandy Munro claims that one little-known aspect of Tesla's amazing industry takeover plan has the potential to skyrocket the stock price to $1,000 per share by 2026, a forecast that many investors are closely following. But is the massive manufacturer of electric vehicles able to achieve this? We'll dissect the data and investigate the variables that could affect Tesla's growth trajectory in this video. So take a seat back, unwind, and let's see if Tesla can achieve its 2026 stock price target of $1,000 per share. First things first though, make sure you subscribe to Wall Street Games and don't forget to hit the like button. Now, let's get started. Sandy Munro believes that within 3 years, the price of a share of Tesla stock might reach $1,000. Given that I anticipate the share price to reach $1,400 by the end of 2023, the outlook is optimistic. So it would be like Christmas coming early if Tesla stock hits $1,000 per share by 2026. The stock is already trading in the lower 200s to higher 100s, indicating that 2022 has already gone, according to the Tesla stock price prediction chart for 2026. With almost 1.3 million car deliveries, the overall net income revenue was noteworthy, and the EPS was approximately $4.07. We predict considerably more growth between 2023 and 2026, with 1.858 million cars delivered in 2023 alone. Check out our video from the first quarter of 2023 where we break down the deliveries and production for the year to see how we arrived at this figure. By 2026, we anticipate about 5.1 million car sales, assuming a 40% annual growth rate. The average selling price will be $50,000 in 2023, $51,000 in 2024, due to the Cybertruck, and $50,000 in 2025. A tiny car might be introduced in 2026 and sold for about $49,000 per unit. This would allow for larger-scale production of the vehicle. Additionally, we estimated each vehicle's operating margin, which will be 14.5% in 2023, despite the possibility that recent price reductions would cause it to drop to 13% or 12% in the upcoming years. By 2026, we anticipate a minor increase in the operating margin to reach 16%, 17%, or 18%. Lastly, we took into account the credits and earnings from the vehicles, together with the one-time cost for autonomous driving. It is anticipated that this charge will rise by $2,000 annually beginning in 2024, 2025, and 2026. It is realistic to anticipate a yearly increase moving ahead, as this charge was $8,000 in 2020 and grew to $15,000 in 2022. Though it may appear lofty, Sandy Munro's forecast of $1,000 per share by 2026 is very definitely attainable. We can see how it's possible to accomplish this aim by taking into account the numbers and several elements that could affect Tesla's growth. Nevertheless, before making any investing selections, it's crucial to constantly conduct due diligence. We must examine the data in order to comprehend the prospective rise in Tesla's revenue. With 279,000 customers choosing to pay a one-time price for self-driving, FSD, at a rate of $2,000 per share increase, there were 1.858 million Tesla vehicles delivered as of 2023. This corresponds to a 15% FSD opt-in rate. On the other hand, we do not have any information regarding the number of clients who are paying the $200 monthly subscription charge. It is possible to determine the total revenue per FSD and vehicle sales, which will rise by 2% a year, using a conservative assumption of a 15% opt-in rate. By 2026, Tesla's energy profit might reach a total of $12 to $15 billion, with an annual growth rate of roughly $450. When currency charges are taken into account, the net income for each year approaches $1.55 billion, translating into a total revenue over $100 billion. Earnings per share, EPS, is projected to be 4.92 cents in 2023 and will rise annually through 2026. With an operating margin despite the fact that some may find it unduly optimistic. First off, we might not be in a recession or bear market. Furthermore, Tesla can still gain from economies of scale. After dissecting the fundamentals, the next step is to calculate the price per earnings, PE ratio, which will yield the stock price. It is noteworthy that the number of outstanding shares of Tesla is decreasing annually by 2%. A P/E of 60 by the end of 2023 is conceivable, translating into a stock price of $295 per share and a valuation of around $1 trillion. In 2024, if it proves to be a prosperous year, we might witness even higher growth. Although Tesla has a large potential for revenue growth, it's crucial to take inflation, operating margin, and outstanding shares into account. Although there are good reasons to be positive about the future, it's crucial to maintain perspective and take all the factors into account. We point out that if Tesla had a P/E of 60, its total revenue would have approached $300 billion, and the company would have a net income of more than $57 billion. Although we admit that this sounds absurd and out of control, we'd also point out that if Tesla keeps growing at a rate of at least 30%, it might actually happen. They imply that in order for Tesla to keep growing at this rate, it would require additional revenue streams, including as electricity. To make the P more reasonable, we think Tesla could boost car deliveries. They speculate that Sandy Munro's projection of $1,000 per share in the future might be an attempt to calculate this. We see that if Tesla's growth is 40%, 50%, or 60% overall, then something must be going on with the company. Despite realizing the difficulties that lie ahead, we are yet hopeful about Tesla's stock values in the future. Together, let's do some math and examine Tesla's development throughout time. About 500,000 Tesla vehicles were delivered in 2020, and Elon Musk announced that the company intends to grow at a 50% annual rate. Based on our calculations, they should have delivered about 750,000 automobiles in 2021. Nonetheless, they delivered 936,000 vehicles, or nearly a million of them. They should have delivered over 1.1 million vehicles by 2022 if they had added an additional 50% growth rate, but instead they delivered 1.3 million. If we keep the growth rate at 50%, they should provide slightly less than 1.7 million cars by 2023, but we think they'll deliver more. 1.8 million. It will be difficult for Tesla to meet their 2023 delivery target of 1.8 million cars, but we'll have to wait and see how they fare. With an additional 50% growth rate, they should supply slightly more than 2.6 million cars by 2024. Although we still estimate that they will produce roughly 100,000 more automobiles, the difference is narrowing. Looking even further ahead to 2025, we estimate that they will deliver 3.6 million automobiles, but if we maintain a 50% growth rate, they should produce about 3.8 million vehicles. By 2026, if we assume a 50% growth rate, they need to supply over 5.7 million vehicles. Now let's substitute the stock price for these figures. After 3.789 million cars are delivered in 2023, the stock price would be $718 per share, or 60 P ratio. By 2024, after 5.683 million automobiles have been delivered, the stock price would have increased by 40% year over year to $1,141 per share. By 2026, they will require a 54 P ratio in order to hit their target stock price of $1,000 per share. It is easy to obtain a 50% to 60% P ratio with Tesla's anticipated growth. Furthermore, a 56 P ratio for Tesla would be regarded as inexpensive if complete self-driving cars, FSD, were to become generally available and regulated by that time. Every year, Tesla reduces the amount of shares outstanding by 2%, which may have long-term effects on the stock price. However, there's a chance of a buyback that would lower the number of outstanding shares and raise the stock price if Tesla makes between $50 and $60 billion by 2026. Long-term, Tesla has a bright future, despite the uncertainty surrounding the near term. In terms of energy, FSD, and total renewable energy, no one compares to Tesla, therefore buying one is a smart move. The speaker is fully invested in Tesla stock and has faith in the company's future. Even though Munro is a well-known figure in the automotive sector and has a wealth of automotive knowledge, the speaker admits that Tesla's stock market value is not the same as the company's true worth. Fundamentals will eventually catch up with the stock, but it's hard to say when the market will recognize the discrepancy. Because of this, investing for the long term is crucial, and it's critical to avoid getting too sucked into the market's short-term swings. Our video for today comes to a close now. Remember to subscribe to the channel in order to receive future updates. We appreciate your time and will see you in the upcoming video.